This is the weekly review for the week of July 4th to July 8th, as well as this week's Sunday preparation. So on Euro going into the week, I was expecting this equal low sell side liquidity to be taken and then price to reverse, break market structure, and trade into the premium of the potential dealing range formed and target these imbalances in premium. So GU actually ended up doing what I expected EU to do, and EU was extremely heavy and basically fell off a cliff. Um, but at least my initial bias was correct in terms of this sell side liquidity here and here being taken at the beginning of the week. So Monday was the US bank holiday, so nothing really happened on Monday um, besides the fact that we formed two fair value gaps. The action really started on Tuesday, London session, and that was the only entry for Tuesday because after this entry on London price just basically fell off a cliff. Um, but it was a very clean entry. So we have the premium and discount of Monday's range. Price opens up on Tuesday, and we have a Judas swing that takes out Asia high, also goes into premium of Monday range, fills in the H1 fair value gap and M15 fair value gap from Monday. And we also have an SMT with GU. The SMT wasn't with a major high, but it was just an additional confluence with all of these other factors to show bearishness. And after the break in market structure here on the M5, we retraced into premium from that swing high to this swing low right here into the fair value gap. We did miss the breaker, but that's not that bad. Overall, this was extremely clean price action. And of course, I missed it because I am not up for London session. So, yeah, then price just fell like 200 pips today, or on Tuesday, and New York didn't really do anything. Also, I wasn't even going to be interested in doing anything in New York because these weekly equal lows as well as the 2017 low were basically my objectives for the week, and price just smashed through them by 100 plus pips. But the logic was very sound for Monday or Tuesday, and I understood it, so that was good. Then coming into Wednesday, we basically did the same thing. We rated Asia high into a fair value gap, broke market structure, and returned to a fair value gap in premium of the displacement range and fell down even lower. Again, this was in London session, so I wasn't up for this. But in terms of the structure of the day and within the bearish bias, this was very clean. Now, in New York, I was looking for a short, and we had this M15 fair value gap form, as well as this larger H1 fair value gap. However, it wasn't in premium. It was in discount of the Monday range, at least from here to here. That's what I was looking at live. And I was just looking at it as a paper trade because on Wednesday at this point, price has fallen like 300 some pips. And I wasn't really sure, where this was going. So I was just looking at paper trades. But we didn't end up retracing into the M15 fair value gap. So on Wednesday, I thought I was probably going to be done with Euro for the week. But then Thursday, we set up some very clean price action. However, it didn't play out clean at all. So we started with a SMT with GU of previous day's high, broke market structure down, returned to this fair value gap here, and just before New York session, we rated a short-term high and formed another SMT with GU with London high, and then we had displacement down, breaking market structure. So, and all of this happened inside a H1 fair value gap, and price returned to premium slightly of previous day's range. So I felt that this was very, very bearish. Even though GU looked bullish to me, I decided to set limits for this trade, just the standard mentorship setup, fair value gap and premium. I set my limits at the 50% mark, and price ended up returning to the fair value gap to the 25%, but on these raid setups, the initiation of the move down, I always want to get in at premium because that's what ICT says. So my entry limit got swerved, and then I was looking at the break in market structure of this low-hanging fruit liquidity. If that broke market structure and we formed a fair value gap, I would get in on that, and that's exactly what I did. I put my stop loss at the standard couple pips above the fair value gap high, and we see here I got stopped out slightly, but price ended up rolling over and continuing with the bias. Then we formed a new fair value gap, and my draw on liquidity was these previous day lows. So initially it was this low of the day formed in right at the interim session. Then here it was same thing, low of the day here, but I was going to take a partial at the low hanging fruit just because the RR would allow me to do that. Okay, I got stopped out. Then we formed a new institutional order flow entry drill, and we broke market structure here on the low of the day. So I felt that previous day's low as well as these M5 and I believe M15 equal lows were going to be the target. So I set another limit here at the 25% of the fair value gap. Price ended up blowing through it, not respecting the fair value gap at all, but ended up trading down to the draw on liquidity that I had. So basically my bias for the entire day was correct, but I got swerved initially and then stopped out twice. The only reason, just looking back at this, I can think is just price action was just not very clean, because usually on these days where we initiate with a raid and then we have the institutional order flow entry drills down, those are respected. I have that several times in my journal. So I think this was just a day where price action was very sloppy, because I know numerous days where these fair value gaps would have been respected and price would have the same fallen down to the draw on liquidity. So yeah, then moving on to Friday. Friday I was focused a bit more on GU because, as I said in the beginning, GU set up kind of the structure that I was expecting EU to set up. So I missed a little bit of stuff on EU when I did my printout journal entry. But ICT's mentorship video or review video picked up on what I missed. And the main thing that I missed was the fact that the raid on liquidity or opposing liquidity occurred in Asia. So even though we did have a Judas swing in London, the Judas swing in London was just a return to premium and return to origin of this fair value gap of the initial raid and break in market structure that happened in Asia. So that's one of the things that sometimes goes over my head is I'm always looking for an initial raid of liquidity in London. So basically like we had on Tuesday and on Wednesday of this week. London created that raid, which was also the Judas. We broke market structure and returned to origin in London. But here, Asia created the raid, and we also had a SMT with GU. GU took Thursday's high during Asian session, where EU failed to go above the high of the day here made on Thursday. And then, yeah, we broke market structure, displacement down, took Thursday low, and even though we rated Thursday low on H1 time frame, the bias is still bearish. We see that we have the SMT confluence as well. And this was just a return to origin to these fair value gaps, and price just tumbled down even more. Now, this was NFP day, so price action on EU here was actually really sloppy because this H1 fair value gap was not respected where the one on GU was. Now, there wasn't really a clear setup here on the move up like there was for GU because there was no liquidity rate. So that's why in New York session, I was not focused on EU here at all because there really was no setup. So what I'm talking about for GU is on the daily chart here. This is what I was expecting for EU. We would raid those weekly equal lows here and then reverse and have a break in market structure with displacement. So here we created a dealing range with buy side taken, sell side taken here, and we have the swing low formed on the 7th. And take these out. We had now, here, the H4 break in market structure with displacement up. And then because we formed a dealing range here on the daily chart, I was expecting price to trade to internal liquidity in premium of the dealing range. So we had, just before NFP, price come down a retracement into OTE of the displacement range that broke market structure from that low to that high. So I saw this, and we also came into a H4 order block and had displacement away from it. So that's how we created the setup here on GU, where EU was kind of in the middle of nowhere, just down here. Like the only liquidity nearby was like from 10 years ago. So that's why I was not focused on EU at all. GU gave us the raid, the break in market structure here, OTE, return to origin, inside the order block with displacement away from that. So live, I actually missed the fact that we rated also previous day's low. So this was even more confluence. And we also had this SMT. I did see that live. And before NFP, I was just basically looking at this H1 fair value gap. And I said, I was going to enter at the standard 25% and put my stop below here, because if price were to break this and go lower, then we're not going to be bullish. Price already came into OTE with SMT and inside the order block. So there's no reason why price needs to raid any more liquidity here. So that's why I decided to get in on the fair value gap. And what I noticed looking back is the reason why price came so low into this fair value gap, and I actually almost got stopped out. That was my stop loss right here. So it was just barely by the skin of my teeth I was stayed in the trade. We had a lower time frame mentorship setup form with the rate of previous day's low break in market structure here, and price came all the way down here to the breaker, M15 breaker here. As well as the order block, this order block here. And then we also had a M15 fair value gap in here, the bottom of it, that it fully rebalanced. Now, the reason that I liked Friday here on GU a lot is because at the same time that I was taking this bullish setup, we had a bearish mentorship setup form. So we rated liquidity here, had a SMT, and had displacement down. And then we also had this bearish M15 fair value gap in premium of that high to that low. And that's just the equilibrium here of it. So what I learned and noted in my journal for this day was just how important narrative is. So even though we formed a bearish setup, the H4 and daily chart on GU is bullish, right? We just took external range liquidity and we formed a swing low below it, and we have a high time frame SMT. So it's very likely that price is going to retrace to premium of the dealing range created and take internal range liquidity, right? So, and we're in discount of the daily dealing range. So we would be shorting in discount, even though this is a textbook setup short based on the mentorship setup as everything. SMT, nice displacement down, selling in at fair value gap and premium. The higher time frame says that we're bullish, at least in the short term, on GU. And that's why this setup failed. So I really like that that formed and it basically failed. And my initial bias, which was in line with the high time frame bias, was actually correct. Now, I did end up getting stopped at break even on this trade because I rolled my stops to break even around 10 a.m. here. And just the reason for that was it was a Friday and I didn't think that price should retrace back into the fair value gap at around 10 a.m. since it was getting close to London close. And there was no more news after non-farm payroll. But price ended up running up and taking my initial partial, which was going to be this low-hanging fruit liquidity. Also the swing high prior to the RTO of the raid, the bullish raid that we had. So I did also note in my journal that that was not following the rules because price did not move a minimum of 50% of my projected range. So my trade ultimate TP was going to be just the mean threshold of the daily dealing range formed. And as ICT noted in the mentorship video for risk management, he said not to move your stops until price at least trades to 50% of your targeted range, like take profit range. And that's when you move your stops to 25%, or you reduce your stop by 25% of your stop loss range. So I did not follow that, and I noted that down in my journal. But again, the only reason I did not follow that is because it was a Friday and the time of day. But basically, this also shows that like price can do whatever it wants close to 10 a.m. on a Friday, and that's when we have the move. But the most important thing is that at least the logic was correct for me. So I'm happy about that. So moving on into next week, I think next week is going to be a bullish week, and we're definitely going to at minimum for GU, trade up here and close in this daily fair value gap and come into premium of the displacement range. Now, I'm gonna be looking at both EU and GU. GU is obviously the stronger one because it had the higher low formed, and we're actually very, very close to premium of this dealing range already. So the only other thing that we have here is an order block. And then a fair value gap up there on the daily chart, and deep premium here. I think this is, let's see. Yeah, right at the top of the OTE. So in terms of the news, also we have high impact news for pound on Monday and on Tuesday, and then the big CPI news on Wednesday. PPI never really moves price, and then this is Friday, so this is probably going to cause a reversal of the weekly range. So because we have high impact news on Monday and Tuesday for GU, I think GU is probably going to be, and GU is stronger, I think it's probably going to run up into premium very early on in the week. But I'm going to be looking for long setups into the premium of this dealing range to take internal liquidity. And then for EU, something similar. We did not form a dealing range yet, so we took buy side here and sell side here. I'm anticipating that Monday is going to form this swing low here, and then when it does, that's when we'll have the dealing range. And we have this daily fair value gap and daily order block in premium of the range. So I anticipate that price is going to trade up into that and then probably roll over. So I'm going to be looking for longs this week on EU. And then similarly for DXY, we created, or potentially are going to create, this new dealing range here. Buy side taken here, and sell side taken here. And then we have this daily fair value gap inside premium of the range. So I think that considering that higher time frame in terms of like interest rates and stuff, DXY or dollar index is still going to be bullish compared to foreign currency. We should just anticipate a retracement here and continue going higher. So lastly, I was just looking at Swiss franc US dollar, or US dollar Swiss franc on the higher time frame, and I decided to set limits here because on the monthly chart, so this is just like a swing trade idea that I have. I don't like monitor Swiss franc a lot, but I feel that I'm in line with the bias for this trade, and I'm just going to see if it plays out. So we have this higher time frame mentorship set up on the monthly with SMT, break and market structure, return to the fair value gap and breaker, consolidated in this breaker for fucking months, and then we had this displacement away. Now we have this fair value gap here on the monthly chart, and this was a weekly raid with SMT inside the monthly fair value gap, and price also retraced into premium of that monthly range from there to there, and we have equal highs created here. So I was just watching this week, and now we broke after this H1 weekly liquidity raid. We broke daily market structure, so we took sell side and we took buy side here. Now if we form a swing high here, that's potentially going to be a dealing range, and then we have this fair value gap in discount of that range, and I'm going to potentially reach for these equal highs. That's what I'm thinking. So yeah, just because this is like, this looks very clear to me on the higher time frame, I set a limit here at just the 25% of this fair value gap. and targeting these relative equal highs for buy side. I would take most of my position off. That would be my first partial, and then I think eventually price can come up here to the big figure level, the 103 big figure, with these triple relative equal highs on the monthly chart, considering we had this monthly setup with the monthly raid and break in market structure. So I'm going to take most of my position off if I get a fill here at this daily equal highs, also weekly equal highs, I believe, right? Yeah, weekly equal highs as well. And then leave a small remainder portion on for this 103 big figure. And then this is also in line with the idea of dollar going higher. So yeah, going to see if this higher time frame setup plays out. Yeah, basically just looked at this chart on the high time frame. I'm not going to be like trading intraday on Swissy. That's just for Euro. But just the fact that I saw this on the higher time frame and it was clear to me, I feel like I want to take a trade on this. So yeah.